start looking for a pattern on that 5-minute chart that looks something like this, right? Forms a higher low, right? And right at this point, when we see something like a higher low, let me open this up, all right? When we see something like this form, we have to wait for the low to form. We're kind of jumping ahead here, we got aggressive, you know, it's okay. You want to be aggressive, that's fine. Just make sure that your risk is acceptable. And then forms a low, then we have to see a higher low form, right? So here's your low. Oops, come on. Here's your low, here's your higher low. Once you see that higher low form, you can get aggressive again and say, oh, taking the trade right here. There's your entry right there. So that when this starts pulling up, boom, you're in the trade, and then maybe you get the retest. That's the more conservative entry, and then the move back up to the upside. All right, so let's see. We'll see if we can. We just drew that out very, crudely. Let's see. Wouldn't it be interesting if we saw the pattern just form like that, as we got into this trade? All right, so not sure what's going to happen, but when you are able to understand price action inside of your trend cloud system, you'll be able to do this as well. You will be able to draw this stuff out the way I'm drawing it out, and I will help you. My job is to get you consistently profitable. When you see in your simulator, pull this over, I'm going to get you profitable in the simulator. Here's the wins. Take a look. Got 1, 2, 3, 4 wins in a row, couple of losses, right? Nothing's going to be green across the board, right? This is all very recent stuff, right? This was yesterday. Here's today, right? Tried to get in on that first ADR checkpoint. We got risk-free and it pulled back. Then this was also gold, I believe. Yeah, took a couple of shots, right? And didn't work out. When you have an understanding of price action inside of Trend Cloud and what it looks like, right? Price pulls back into Trend Cloud, makes the move up, right? Goes sideways, consolidates, big move up, forms a demand zone, price pulls back down, goes a little bit past that demand zone, kind of wanted to hit this area here and then move up. You've got these ADR checkpoints. Let me clear that, right? Got those ADR checkpoints. We thought maybe it wants to come down, hit the 50 simple. Not sure. Supply and demand zones are very powerful along with these ADR checkpoints, especially when they are inside of a demand zone. They become very powerful reference points. Very powerful reference points. So let's see if we can survive this. What we want to see is this 5-minute candle here start to break through structure, right? We want to survive this until we get a break of structure there, and then we could really let this thing run. All right. My job is to get you profitable in your simulator first. I don't send people off into the live market. If you want to do coaching with me, we're going to work inside of the simulator. You get me I have 2 packages. You can get me for 90 days, or you can get me for the whole year, one-on-one. We're going to go over everything. We're going to get you profitable in the simulator. Then we're going to get you profitable by yourself in the simulator. And then we're going to move you into the big leagues. All right. Step by step, I'm going to take you there. So I'm just going to pause the video and we're going to see how this trade works out. Guys, we're back. We're up a little over $840. And I had another buy entry point right down here. I'm going to erase that now. Going to get rid of that. And we're just going to work this entry point. Let me show you what happened here. We did get stopped out. Gold pulled back pretty deep. And look what it did today. We hit every single ADR checkpoint. So essentially what we were doing is we were being very aggressive, because you can see momentum is against us. We know we're in an uptrend. We know that people are buying gold. And this is big institutions pushing gold down back into that 4-hour consolidation area or demand zone, right? So this is a big level of imbalance here on gold where all the buyers are sitting. And today, if you were using your trend cloud, you could see that this is a deep pullback and we just hit every single ADR checkpoint. So right in here is where we tried to get in on the first time. We got stopped out, broke through this demand zone, And then we said, oh, where is the next entry point? And we started taking entries here. Then we took another entry at the very last ADR checkpoint that was inside of this high time frame demand zone, and it averaged out to halfway in between both. That makes perfect sense. But you know, if we took all of the contracts right at that very last, you know, entry point, well, then we'd be in super great shape, right? But you know, we were being aggressive. We tried to get in here, then we tried to get in here. So we took a couple of losses. You will take more losses, small losses, you know, and look, let's take a look at it. This is gold. This is natural gas. This is a trade on natural gas that didn't work out. But look, gold, look, we took 1, 2, 3 shots at gold and we missed each one. Here's our winners down here. We are still up. Remember, we started with a $20,000 account. We are up $860 now. Here's all our winners, and you will take some losers if you are more aggressive. And that's what we're doing. We're playing March more aggressively. In February, we were up 24% and we were playing it conservatively. March, we're playing it aggressively, which means we're going to take the entry points against momentum. We're waiting for momentum to catch up with us, right? But when we see gold in an uptrend across multiple time frames, and then we get these deep pullbacks into our ADR checkpoints, we can be aggressive, and the profits could be, you know, super profitable. You could be super profitable very quickly. So you get more aggressive, you will get more profit faster. All right. Rather than wait for, you know, that move on CCI to break above positive 100 and for this to start, you know, cycle indicator on the high time frame to start hooking up again. You get the green bar back on momentum, and then you start looking for the trade. That's more conservative. The more aggressive way is looking for those ADR checkpoints inside of the high time frame demand zone. All right, so that's what we did. So we have 2 contracts now, and we can start scaling out of the position. As of right now, here is the, right, from here to here, stop loss, and we're just about at a 1-to-1 now, right? We're pulling back into the trend cloud here on downward momentum, right? Let's clear the chart. Downward momentum in an uptrend. So probably want to clear out of one contract here, right? We're buying, so we want to sell one contract and scale out of the position and capture some of that profit. All right. So, you know, what is going to happen here? If we let this run, and we're saying this is the end of the downtrend here, we did get a break of structure right here. So here's your low, here's your lower low. We broke through structure. Now, what do we want? We want to see on the 5-minute chart. Let's open this up. Let's clear everything so we can look at this. All right. What do we want to see here? Here's your low. Here's your lower low. We broke through there, right? Broke through structure. What's next? Now we have to see a higher low. We've got to see a higher low put in and then a break of structure right here. That's what we want to see in order to take this trade long. Structurally, that's what we are looking for. We could scale out of that, see if we can make it. If we break below this candle, why don't we do it that way? If we break below this candle here, all right, which it looks like it wants to do, put it right there. And we're going to say, basically, we're taking the bounce, right? We're hoping that as we pull back, it forms a higher low, in which case we could get back in when we break through here. Boom. So we scaled out of that position. We captured that $380. Where's this going to pull back to? Let's jump on to that Fibonacci retracement, right? Swing low to swing high. So this might pull all the way back to our entry. Where's our ADR checkpoint? Pulling back to that ADR checkpoint. Maybe we retest this ADR checkpoint, but now we've got some levels here, right? We really need to see now. We don't want to, here's the stop loss. You know, do we want to take that risk, or, you know, Do we want to get back into the trade? We don't want to lose any money, so we could get risk-free. Maybe it pulls back to the 3 or to the 50%. If it does pull back down into here, we can get back in. This is risk management. This is risk management. We want to start capturing profits. We want to start capturing profits, right? It might just pull back really deep and then make a lower high somewhere up here. We don't know. We took the bounce off of this candle right here. So we're in a risk-free trade now. There you go. Risk-free trade. We really want to capture the movement all the way back up to here, right? And beyond. So we're trying to stay in this trade. We're trying to stay in this trade without giving any profits back. And we've got it. We don't know what it's going to do. It might go all the way. It might go lower, but we're in a risk-free trade. If it pulls back, stops us out, we make $30. We just made 380 and we got back some of the money that we lost. We're still up. Started with a $20,000 account. We're still up. So that is how you would handle risk management. Always get yourself risk-free. Get yourself risk-free and, let the chips fall where they may. I'll continue to manage this and we'll have a really nice video put together for you guys on risk management. Getting a really nice move up here, up over $650. We're protected by a $50 stop, which means if this does pull back to retest this demand zone here, then we'll only make, we'll make $50. Heading back up towards this 5-minute supply zone. And what we want to see is a break of structure. We want to see a break of structure. Maybe this thing goes sideways for the rest of the day and then makes the big move up. What does that look like? We're well, if this goes back up into here and hits that new high again, we're looking at almost $4,000, right? In fact, we are looking at about $4,000. So I just want to point out the average daily range and how unusual this is to hit every single one. That is quite a statement that the gold market is making. It went 100% of its average daily range right around 935. It went 125% of its average daily range at 955, all the way down until 1125. It hit 225% of its average daily range. This thing is exhausted. What we're waiting for is some sort of like sideways meandering movement. And then slowly, by tomorrow, this thing starts to move back to the upside. We really hope it doesn't come back down and retest any area. We want to get a little bit more movement to the upside. Let it go past here, break above this 5-minute supply zone, and then retest that for the move up, right? We just want to survive. We just want to survive this. And I think we've got a lot of potential here. But again, this is a risk-free trade. If it comes back down and retests this area, well, then we'll have to see how aggressive we want to be and get back in. If it retests this area, we make $50 and then we buy it back right here at the ADR, the lowest ADR checkpoint. Now, we had no idea which ADR checkpoint it was going to hit. We just followed the candlesticks and we followed our trend cloud system and we took a couple of shots. We took a shot here. We took a shot here, got stopped out. We knew the trend was strong and that lots of people are buying gold right now. So we're looking to buy the dip. Makes sense. It makes sense to buy the dip on gold. And well, here's a possible dip area. Each one of these ADR checkpoints. Stopped out twice, got back in, 2 contracts, made some money, scaled out of the position. Now we're holding 1 contract. Hopefully we can survive this and this turns into a 5-minute uptrend, which would mean, and we're getting that here, right? We're starting to get the hook up on the 1-hour chart. And that means, right, we're starting to get that hook up. Maybe we get another little dip like that and then the move back up, right? That's what we're looking for. See, Trend Cloud gives you the answers the entire way so you can manage the trade appropriately. That's what you need. You need to understand how price action moves within Trend Cloud. And then, guys, it's easy. Then it's easy. It's like, oh, okay, we hit the ADR checkpoint. Let's get in. Let's start waiting for that cycle indicator on the 1 hour chart to start turning over. Yes, momentum is against us because we're still in this corrective phase on the 4 hour chart. But as soon as we start seeing the break of structure on the lower time frames, like we did right here, we're going to form a higher low and then a break of that structure. And that's the pattern we look for. All right, this is all in your technical analysis course, and we will go over this in the group meetings that we have daily and also in your one-on-one coaching sessions. So make sure you take advantage of that, especially if you're on the 90-day plan. If you're on the 1-year plan, then you have plenty of time for one-on-one. So I'm just going to let this run. I don't want this video to get too long. Beautiful move. We are moving up. Notice how, the wins, this is going to be a big win, is much greater, right? See, small losses, big wins, right? Now we're at $780, right? Pulled back deep, risk-free trade. We got out at $30. That's what we're in right now. If it pulls back, then we're only, we'll make $50 until the next big move, right? Unfortunately, we took some hits, right? We got aggressive. We're playing an aggressive game in March. And so we took some losses, but the wins are bigger than the losses. And that's how you make money and become consistently profitable. Okay, guys, I will see you in the next video.